So I want to look at a correlation in today's video, and I kind of tend to think this correlation is going to hold for a while. So as stocks topped here, this intermediate cycle topped, the stocks topped and were trending down. Basically, they just quit going up. That was gold's chance to put in this third daily cycle rally. But as soon as stocks bottomed and started to rally again, then gold started to correct. We're now, today is going to be the 33rd day of this daily cycle right here. So stocks are due for some kind of corrective move, but this cycle is extremely right translated. So at this point, I can't tell whether this little mild dip here actually was an intermediate cycle low, or whether over the next let's say 4 to 6, 7 days, we're going to get a pretty hard move down, and we break below this 2320 area and get something that looks a little more like a true intermediate cycle low or not. I just can't say here. There's so much intervention in the stock market ahead of political events. We had the FOMC meeting here at the beginning of May, so the market had to be pumped back up for that FOMC meeting. Possibly they short-circuited the continuation of the intermediate cycle low, which I think naturally would have rolled over here and probably gone down and broken this low. So we've just the government has just created a mess in the stock market. Corrections just aren't allowed to run naturally, so we get a lot of weird stuff going on. But we're 33 days into this daily cycle. You can see here yesterday stocks are trying to correct, but as of yesterday anyway, they're not being allowed to. The futures are down a little bit again today, so we'll see what happens here. We should, I'll say that, we should get some kind of correction here over the next 4 to 7, 8 days. And if that's the case, then that should release gold to give us some kind of a bounce here. I do not think this is an intermediate cycle low. Every intermediate cycle low from 2000 on has formed in one of two ways. They have all created at least a failed daily cycle, and by that I mean the daily cycle. There's always been at least one daily cycle low that has dropped below the previous one. And this was the previous daily cycle low. You can see we haven't done that yet. So we haven't fulfilled that qualification. So we either have to have a bounce and then one more daily cycle down. That would, assuming that this is the daily cycle low right here, we would need a bounce and then a left translated cycle that breaks below this daily cycle low, and then that would fulfill that qualification that we've got at least one left translated and failed daily cycle. The other qualification is that every intermediate cycle low has formed as an ABC correction. So it's possible that if this daily cycle just has a brief little bounce here, maybe we kind of pop up to the 1240 level, not really enough to qualify as a daily cycle low. We pop up to say the 1240 level, and then we have another leg down, and that leg goes below the March daily cycle low, then that would qualify as an ABC correction, and we would have a failed daily cycle, and we we could put in an intermediate cycle low that way without having to have another complete daily cycle that runs all the way out to the probably the end of June. So that is a possibility too. But and also the COT reports, the mildest reduction in commercial shorts that I could find was this intermediate cycle low in May, and you can see this may have been the mildest intermediate cycle low of the whole 17-year period, but you can see we've got the qualifications. We've got a ABC correction, so we've got a leg down, a bounce, and another leg down, and we've also got a break below the previous daily cycle low. So we've even in this really mild correction right here, we've still covered both of those bases. We've got a three-wave pattern down, first leg down, a bounce, second wave down, and we've got a break of the previous daily cycle low. We don't have either one of those qualifications yet, and to go back to my original train of thought, the commercials reduced their commercial short position by about 64,000 contracts. So that was the mildest intermediate cycle low in terms of reducing short contracts by the commercial traders, selling long contracts by the long specs. That was the mildest intermediate cycle low I could find. So far, now I haven't gotten Friday's COT report yet, but so far the commercials have only reduced their short positions by from the absolute high. They've only reduced them by 11,000 contracts. So also, as I mentioned before, sentiment right here is at 43% bulls. That's just not really, that's neutral. I would like to see sentiment get down below, let's call it 35% bulls. If we could get below 35% bulls, that would be more in line with what I'm looking for out of an intermediate cycle low. So I'm going to say that we're not done yet. One of two things has to happen. We either have to have a mild bounce, maybe up to 1240, and then we stretch this daily cycle down and take out this March low. That could give us an intermediate cycle low, and if that were to happen, we could get that intermediate cycle low by the end of the month. If not, if gold were to bounce and let's say make it back up to 1250 over the next, let's assume that the stock market will somehow give us a correction over the next 4 to, let's call it 7 or 8 days, then we would expect gold to bounce for that same period of time, 4 to 8 days, and then once the stock market finds that bottom, then we're going to come back. We're going to break through. You see, we've been consolidating sideways here for about 2.5 months. So we're building a base here. We're building a base for the breakout. So once the stock market completes that daily cycle low, then look out above. We're going to break through this, and we're going to put another leg up, and that would presumably would drive gold down into its final intermediate cycle low that I think would probably test that lower triangle trend line, which is going to be somewhere between 1160 and 1180 on gold. So my expectation at the moment anyway is that stocks they're going to struggle, but they're going to give us some kind of a move down into a daily cycle low over the next week and a half. Gold should bounce during that period of time. I don't think there's any chance of gold getting back above this high during that bounce. There's just too much damage done here. But a little bounce, and then I think gold probably rolls over and gives us that final intermediate cycle low. in June, and at that point I would look for the commercials to cover at least 100,000 of those shorts. I would think sentiment would be below 35% bulls, and we're gonna take out this March low. We're gonna complete a failed daily cycle. So I'm guessing that this will turn out to be the daily cycle low. Little bounce as the stock market corrects, and then we'll have a left translated cycle that breaks this this daily cycle low, and then we get our final intermediate cycle low probably in late June.